Before we begin, hit the like button and subscribe for more in-depth stock breakdowns and earnings analysis every week. Shopify's second quarter results for 2025 were exceptional, delivering strong top-line growth and bottom-line profitability, which led to a significant post-earnings stock surge. The company reported revenue of approximately $2,680 million, beating analyst estimates of $2,550 million. This marks a robust year-over-year increase of 31%. Gross merchandise volume, or GMV, climbed to about $87,840 million, up significantly from $67,250 million a year earlier. This growth was driven by strong merchant activity across all major geographies, with especially strong gains in Europe, where GMV increased by 42% on a constant currency basis. Gross profit for the quarter reached around $1,300 million, compared with $1,050 million in the same quarter last year. Operating income rose to $291 million, up from $241 million, showcasing strong operating leverage. Operating expenses were well managed and accounted for 38 to 39% of total revenue, indicating improved cost discipline. Adjusted net income rose to $338 million, up from $291 million, while GAAP net income came in at $906 million due to gains from equity investments such as Affirm, a significant increase from the prior year's $171 million. Free cash flow remained strong, coming in at approximately $422 million, which represented 16% of revenue. This marks 8 consecutive quarters of double-digit free cash flow margins, demonstrating the scalability of Shopify's business model and its ability to consistently generate healthy cash flows. Merchant Solutions revenue came in at around $2,020 million, exceeding expectations, while subscription revenue reached $656 million, slightly below forecasts. Investors responded positively to the strong results and bullish guidance, with the stock surging by more than 20% in after-hours trading. Management issued an upbeat forecast for the third quarter, expecting revenue growth in the mid to high 20s% range. Gross profit is expected to grow in the low 20s, while operating expenses are projected to remain within 38 to 39% of revenue. Free cash flow margins are forecasted to remain in the mid to high teens, reflecting continued profitability while still investing in innovation such as AI-powered merchant tools. Technically, Shopify shares broke through previous resistance and set new 52-week highs following the earnings announcement. The stock had formed a bullish base near the $117 mark and broke out convincingly. Momentum remained strong, and the stock could continue trending upward toward the $160 to $175 range if it maintains institutional support and macroeconomic conditions remain stable. Key support now lies in the $130 to $135 range. Fundamentally, Shopify is benefiting from increased adoption of its AI-driven tools that streamline store creation, inventory management, sales analytics, and promotional campaigns. This strengthens the platform's competitive advantage and increases stickiness for both small and medium-sized businesses. The company is also expanding globally with strong performance in Europe and Asia Pacific, adding geographic diversification and reducing reliance on North American markets. Additionally, innovations such as real-time tariff estimators and AI-generated storefront builders are helping Shopify differentiate its offerings from competitors like Amazon and BigCommerce. Cash flow remained entire. Mars a highlight. With free cash flow of $422 million and capital expenditures kept minimal, Shopify continues to deliver strong operational efficiency. Management expects free cash flow margins to remain in the mid to high teens, which supports valuation multiples and further investments in growth and development. From a SWOT perspective, Shopify's strengths include high growth in core metrics, a robust ecosystem of merchants, recurring subscription revenue, and strong free cash flow. Weaknesses include some exposure to global trade policy fluctuations and rising costs from stock-based compensation. However, management clarified that only about 1% of GMV is tied to Chinese imports, reducing risk from geopolitical tensions. Opportunities lie in AI integration, expansion of Shopify payments and logistics offerings, and growth of its enterprise-level platform, Shopify Plus. Key threats include intensifying competition from Amazon and potential regulatory headwinds in cross-border e-commerce. On valuation, Shopify trades at elevated forward multiples, estimated at around 10 to 12 times forward sales and over 30 times forward earnings. These valuations are high in absolute terms, but reasonable given Shopify's strong cash flow generation, consistent revenue growth, and improving margins. Many analysts raised their price targets, with some projecting upside toward the $175 range if the company maintains current momentum. In summary, Shopify's second quarter performance reaffirms its leadership in e-commerce infrastructure and highlights its ability to scale profitably. The company delivered a beat across revenue, gross profit, and free cash flow, with promising forward guidance and continuous product innovation. Despite the sharp stock price increase, the fundamentals support a continued uptrend. Our recommendation is to buy. Shopify offers a compelling mix of growth, profitability, and product innovation. Investors should consider buying on any near-term pullback in the $130 to $145 range, with a medium-term target of $160 to $175 if positive trends continue. Would you like an SEO-optimized YouTube title and description for this analysis next?